Hey everyone, just a quick heads up. This episode is best experienced on a computer. We'll be sharing our screen and walking through some live examples using the Sling software. So you'll get the most value by watching along visually. If you're listening on audio, no worries. We'll do our best to describe what we're doing. But for the full experience, definitely check it out on YouTube or your desktop browser. Let's dive in.
I'm tempted to call them right now while we're on this right now.
We're gonna talk.
Very tempted.
But it could be a good idea to see if the phones are still up. If they're not, then maybe I wouldn't invest in it. So what do you say? We're gonna call them?
I would. Let's do it.
You want to go at it?
All right,
Yes.
David, call them.
That's fun. This phone number is no longer in service.
Thank you for calling Click. How can I help you?
Hi, how are you today?
I'm doing well, thank you.
My name is David, and I'm currently going through some of the public filings for the company. Just kind of doing a little bit of research to understand what the company's doing and how they've been raising money. And it looks like, I think tomorrow there's a reverse stock split that's going into play. So just wanted to kind of call and get like an overview of the company, really to understand what's happening, why the reverse. Is there somebody that I can speak to?
I can leave a message. He's not available right now. His name is Jeff. He could give you a call back though.
That'd be amazing. I would love that.
Okay. Is your number?
That is correct.
Okay. Tell me your name again. I'm sorry I didn't remember that.
David?
David. Okay. And do you have a company you're with?
It's just private investor.
Okay. Yeah. Let me send this message to him when he's available. He'll reach back out.
Amazing. And who am I speaking to?
My name's Melinda.
Hi, Melinda. Thank you so much for taking the call and for the time. Are you in Bountiful, Utah? Is that what it is? Bountiful?
Yes, that's where our headquarters. Yeah.
That's awesome. I don't think I've ever heard of Bountiful.
Yeah, we're fairly small in Utah, but close to the big city, so that's how we like it.
All right. So right outside of Salt Lake. All right, perfect. Well, thank you so much. Looking forward to Jeff calling.
Thank you, bye.
Bye-bye. It's a real phone number.
It's a real phone number. It's a real person. That's a green flag right there.
Yeah, and they're working. It's 5:30 Eastern right now, so they're working the phones. So it's good. It's another piece of information, and
I'm excited to talk to Jeff now.
yeah.
Yes.
So maybe they can give some more insight, and of course, they're not gonna give you any material, non-public information, but there's someone that you can talk to, and you can ask questions, and whatever they can answer, they're gonna answer. So this is really good.
I'm excited. I wanna learn more about them now. Man.
Yeah. And before the call, you can even read up on the financials, see if you have any questions regarding the financials. So if we go look over here, we're gonna have the balance sheet for the period ended March 31st, and it's a comparison December 31st, 2024.
As you can see, we have a big, almost $3 million in related party loans.
Yeah.
Mhm.
They have. Let's go part by part. Let's start with the assets. So the company doesn't have a lot of cash to begin with on March 31st. So it would be a good question to ask yourself, how long is those 39,000 gonna last them? Are they gonna make it to the next quarter? Are they not? If not, what are they doing about it? Are they gonna raise more money? Are they gonna issue debt? Are they gonna issue equity? It's an interesting question to have, and you can see as a comparison at the end of 2024, they have almost $200,000, and now they only have almost $40,000. So I don't think that's enough to run a company, 39,000. So it begs the question, how are they going to keep themselves afloat? And that can come into various different answers, right? Fundraising, maybe they have good operations. We still don't know. Okay, so accounts receivable, it's not that big. I wouldn't I wouldn't think it is particularly concerning for a software as a service company to have very little accounts receivable. Then you have other receivables, equipment. They don't have a lot of equipment. They have a lot of intellectual property, which I assume must be either the software or any other acquisition that they've made. They have leases, which is this right of use asset. Uh, Overall, they have almost $1.5 million in assets. Okay, so
Yeah, but the intellectual property, who define the value here, right? So that's something to also consider, right? Like 1.5 million in assets, but 1.25 is the intellectual property that, at the end of the day, it's a number, right? Like you can decide that the website worth $1.2 million. I can tell you it's worth $1,000, right? Like at the end of the day, it's hard to make a value for that. So I would, uh, um, I would take that under consideration as well.
yeah, definitely. A rule of thumb.
What do they claim that it is?
1.26.
No, but how is that attributed? So if you click on it, or if you go Control F to, let's say, intellectual property,
All
do they
right,
give
so
a definition of what that really means?
let's scroll down. Let's see. Not every company has it. Some do, but let's look. So over here in the notes, it's not here. Related party, operating lease, commitments and contingencies. Here
Maybe
it
do Control F, no?
okay, I don't find it right here, so let's look. How's it written? It's intellectual property, so let's read it. Intellectual property.
Company believe that the code
No, this is a lawsuit, looks like. So they don't disclose it. They don't say what it is.
They are saying. This brings us to a different level of.
I assume that it has to
This
do
bring-
with the website, because they say that the code base and functionality different from any intellectual property. So maybe their intellectual property, it's the code and the software for its platform. I would assume.
This to me now. This brings me to two different places, right? It brings me, okay, who's the auditing firm that is letting them say, hey, my IP is worth 1.2 million, right? They need to have some sort of justification. I mean, I know it comes to managerial discretion, but at some point you need some sort of PCAOB, gap, whatnot kind of stuff. That's one thing. And two, where is this currently in litigation, right?
It's a good question. Let's see if we can find the auditor. Should be over here. Yeah, so just so you know, I switched over to the 10K because the 10Ks require two things. So first, they require to be audited. Quarterlies, they are only reviewed by auditors. They are not audited. There's a difference between the two of them. So the annuals, the 10Ks, they require to be audited, at least for SEC reporting companies, but they require this, which this is the auditor letter. So the auditor letter, or the opinion of the auditors, it's pretty much a letter that where the auditors say that the financials are stated correctly, that they truthfully represent the financial condition of the company, and they also raise concerns, right? So, as to your point, intellectual property is one of the issues that auditors most likely raise. Hey, where did you get this valuation? How do you know that it's correct? So we can see here that Green Growth, it's their auditing firm. They don't seem to have any opinion on the financials. That's good. You're always looking for um, auditing letters or auditor letters that don't have any opinions, because the opinions, it's where, it opens the door to a little bit of, let's call it funny accounting. Let's not call it what it is. Let's call it funny accounting. So this doesn't have any adverse opinion. So we can see that the financials are truthful.
Maybe on the notes we can bring a few examples of different opinions that looks a bit funky. So something to kind of like compare.
Yeah, and it's, another thing. Like we're digging, and we're going even deeper. So going into the auditing firm now, we've seen auditing firms get into trouble lately, losing their PCAOB registration, getting fined by the SEC because of malpractice, because they allow the companies to commit fraud. So it's important to know which auditing firm it is, because maybe down the road they're going to get into trouble, and so you need to know. That's another point. Are you dealing with an auditing firm that is known or in the past has been involved in fines, in lawsuits, or just outright getting losing their registration with the PCAOB? It's important to know. I don't know if you guys know any different, but at least I'm not aware of any problems that Green Growth have on the accounting side. I don't think they're into any trouble. So,
And again, if you want to go deeper, you're just doing a bit of due diligence about, about this, the green growth CPAs. You can do some Google search. We can run some search. But again, this is something that maybe we can do when we're doing the person due diligence. We can show how to do due diligence on side companies and stuff like that. So that can be a separate episode. But yeah, you can go and check, what people are being said, reviews on this firm, what do clients thinks about them, and so on and so on. There is so
what
many
other companies they're
layers you can
providing?
keep going and keep exploring. It's like, like a full onion. You just keep peeling and peeling and peeling and peeling. There is no limit.
Do they have any recent AKs?
The most recent is April 24.
Changes in registrant certifying accountant.
Oh, let's see.
I don't think Green Growth is
Look, they ended their
Relationship
with Green
I
Growth.
don't think they're relevant anymore.
Yeah.
The Tanner LLC.
You're talking 2 days ago.
2 days?
No, you're talking
2 months.
no,
2 months. Sorry.
2 months ago.
Yeah,
Yes,
2 months.
exactly. 2 months
Yeah.
ago. Still recent.
Yeah.
Yeah.
And it's
No disagreements.
and that's important to note, that there's no disagreement, because sometimes, and it's funny that auditing firms do this, when they see that the company might be involved in fraud, they decide to cut ties with the company, which is funny to me, because you'd think that they're the ones that been approving the last couple of years or filings or whatever. So it's convenient that they now all of a sudden decide to cut ties. But over here, they say that it's no disagreement. Maybe Green Growth is an expensive accounting firm. The company, as we've seen, they don't have a lot of cash. They have 39,000. Maybe Green Growth is too expensive of an accounting firm, and they need to change to something cheaper, and that's why they changed. We don't
Possible.
know.
I don't know Tanner. Yeah, I don't know if I've heard of Tanner. I'll look them up too, because I'd like to know what other clients that Tanner works with or whatnot. But if I had to guess, I mean, this is saying the board of directors of Quick is the one that chose to not continue. There was no disagreements, no issues, no nothing like that. And for the good thing here, for for a an accounting firm that you had, if you got rid of them, they're not just going to say, okay, we're leaving. This is actually telling me they paid them. They made sure that all the bills were done. They left on good terms. It's okay. And you're right. Maybe they need somebody different. Maybe Tanner has another scope of work that's related to internet marketing. Maybe it's related to what they're planning on doing with this reverse split, and maybe there's a funding behind it. I don't know. I'm still trying to figure it out. Right now, I do know that limited revenues, limited assets. The debt that's outstanding is related debt. Okay, so if I had to guess, that probably means the CEO, somebody on the board, maybe family or whatnot, is the one that owns the debt. That's probably been keeping the lights on and growing. Big red flag is what's going on with the litigation. So we'd love to learn about that more, because if somebody's coming after their IP, they're probably going to have to close shop. I'm assuming most of the revenues, or any of the revenues, or the projected revenues, are related to the current IP that they have, with them right now. So if that goes away, then it's a tough match. What I'm still trying to bridge the gap here is to see maybe there's an acquisition in play. Maybe they're cleaning out the cap structure of the company, right? Making less shares outstanding, a sexier price stock, because they might be bringing somebody in here. Maybe there's another asset that's coming in. Maybe there's a funding that's coming in. Those are the two things that are on my mind right now.
Those are very good points, and that might as well be the case. Real quick, they're making some money. They're losing, of course. You see they're spending a lot on management and payroll, which is very common in over-the-counter stocks. And you can see on the first quarter of 2024, they paid in management $500,000 after making $30,000 in revenue. It's not a good sign to me.
Hey, you heard Melinda. She's close to the big city. Cost of living's expensive.
Well, probably she's on the payroll over here. Right? So, they're not making any money. Of course, we know that not everything is profit. You can't eat net profit. You have to do cash. So let's look at the cash flow. Of course, it's not looking good. I wouldn't expect any better.
Accounts receivable, other receivable, security deposit, accounts payable.
But we see that last year they raised money from shareholders. So maybe those are some of the loans, the related party loans that we're seeing on the balance sheet. This quarter, they haven't raised anything. Nothing, which, could be good, could be bad. If we continue to scroll down, we're going to see different information. For example, here's the related party notes. So we know that they're probably coming from a shareholder. It doesn't say it over here, but we saw up here in the cash flow that they had shareholder loans. So we know that probably this related party note payable is from a shareholder. They're accruing 10% per annum due on demand. If it's due on demand, then it's very likely that the shareholders are not going to demand payment. They're going to let it roll. They're going to try to get some third party in there with some equity, with some cash, but they're not going to kill the company. I don't know if it's always.
Yeah, not after they put so many millions inside, right? Like
Exactly.
it's shooting
Makes me think what. No, you're right. You're right. Makes me think what so you did the reverse split. Was it, back to the proxies and reverses we spoken to, was it a 14C or a 14A? I'd have to say it's C. Yeah, of course it's a C.
Of course. It's only
it's all coming together, right? It's related party. They own a bunch of the stock. They're controlling the company.
Look, and it's to approve the reverse split,
Correct.
The written consent unanimous from the majority shareholder. They're going to do a 1-for-40, and they're going to reduce the authorized shares to 50 million up from 400 million. So
it's all adding up.
Yeah. So probably the guy that gave them $2.5 million, it's the majority shareholder, and it's the one that approved the reverse split, because it's more interesting, right?
That or the CEO, yeah. He's either the chairman of the board or the CEO, or
probably he's also paying himself a couple $100,000 in payroll. Might be the case. but it's all coming together, right? We're putting the pieces together. So here, in this part, stockholders deficit is usually the part where they talk about the shares outstanding, the stock options, warrants that they have outstanding if they issued any shares. So here we can see that in March 2025, or up to March 2025, they issued $109 of stock-based compensation. But in 2024, they issued they issued 400,000 in stock-based compensation. So that's good. I wouldn't take this as a red flag, but in other types of filings, you're going to see issuances of shares over here. So if they issue to consultants, to directors, as a conversion of debt, as a conversion of preferred shares, you're going to see it over here. And you can see who the company is issuing shares. Well, you can see it if they disclose it. They can or cannot disclose it. It's not mandatory. Um, but we look over here, and as it stands right now, there's not a lot to draw upon over here. The leases, it's good to see how much they have to pay. Is it crucial? Depends on your outlook, depends on your objective. Here it's important, the commitments and contingencies. So here you can see any payment that the company might have due regarding a lawsuit, a settlement, liquidation, all of that. So I think we scrolled over here a couple of minutes ago, but there was
Oh, look at it. See it. It says right there too
yeah.
that intangible assets with a carrying value of approximately 1.3 million at March 31st and may be forced to discontinue its ongoing fee-based sales platform if they lose.
Okay, so but what happened? Okay, so it says NAI liquidation trust proceeding against the company in the new Chapter 11 bankruptcy case. The company licensed some technology. Okay, so we can go into this. We're not lawyers, so we don't know what actually means. But what we can see over here is that the company's, as it stands, they may lose its operating asset, the software. That's what they do. So if they lose it, they pretty much close shop. That's it.
And
They're
now I'm wondering whether the company's even focusing on sales. As we can see, there's not too many. They might just be putting money in to fight a legal battle.
yeah, it very well
Um,
could be.
I don't
It very
know.
well could be.
I don't know. So yeah, I would, if it's
Is
me
there
and it's
any
well
is there any on the P&L, on the income statement? Is there any legal costs?
Let's
Like,
see.
is the legal cost is very high? Did you see that they're spending a lot of time?
in the event Jeff Yates calls me, I need to have some questions.
It's
You
I
know,
would definitely ask about that.
All
they
right.
probably have it under G&A, general and administrative expenses. Could be, very well could be.
Mhm.
But look, we're looking at the company's on the cliff. It's facing the cliff. It's on the way down, but they're still doing corporate actions. Like we see over here, they're talking about the reverse stock split, and we know that they approved it, as we saw on the 14C that was filed. Um,
And the stock is not on 000. It's still at 5 cents. So it's still
yeah,
at a reasonable price. You see that the shareholders has a lot of interest in the company. They invested a lot of money in the company. There are some green flags here too. It's not
someone
only
is
red
trying to keep
flags.
alive the company. Someone is trying to keep it alive. Whether they're going to succeed or not, that's a different case. But they're trying to keep it alive. So maybe there's an investor that likes to focus on turnarounds. And so you look at this and say, hey, this is an opportunity for a turnaround. The company's almost dying, but someone's trying to keep it alive. So maybe you can buy some stock, see if it turns around and if it turns a profit or whatever, you know?
I'm
Um,
very interested. I think we throw this into the sling and we monitor the filings, we monitor dilution, liquidity, and let's see what turns out in the next week. I'm really
So
excited to
I
have
wanna do
this.
two things next week. I wanna do two things. One, Elon, the first thing you're gonna give us an update about your call with Jeff. And two, I would like to go in details about the people who are involved in this company. So maybe we can do an episode to Diligence about the people who are involved in the company to see how everything is connected, right? Like we said that this is all parts of the puzzle. So now we did like a deep due diligence on the company. We looked into their filings. We kind of like got a very big piece of the picture. But now the other piece that I think we're missing is the conversation with Jeff, as well as like knowing who Jeff is, what's his history,
He's the
what type of companies.
CFO. Sorry, Jeffrey Yates, Chief Financial
Yeah.
Officer.
Right, but what other companies was he involved in, right? Like if those were successful companies, unsuccessful companies, who are his partners, who are the other shareholders? I have a lot of questions on that end, and I would love to know, understand who those people who are involved. I feel like it's very important. Who's Fred Cooper? Who's Bradley Cooper? Who's Boone Saivana? Yeah, I hope I pronounce his or her name right. Jeff Roberts, all those people.
Look at that. You got a big family heritage trust in there.
Yeah. No, they're the majority shareholders.
And it's trust number 2. So it means that the trust number 1, it's fully capped,
Provo, Utah. So everything is over there in Utah.
Mm-hmm.
Found
another flag. I don't know if it's green or red, but it's flag, definitely.
It's everything adds up, right? So we've looked at a lot of things, and this is not a comprehensive approach to this. We look at the 14C. We saw that they did a reverse split. We saw that the company's not doing too good, as we saw in the 10Q. They have the lawsuit. They stand to lose their operating asset. They don't have revenue. They have very little cash. Let's go real quick to see if they have any press releases filed lately. No press releases filed since 2024, pretty much. Dr. Fred Cooper, that's the guy that we saw that owns not the majority, but almost. So we can see that the company's doesn't stand too good. Liquidity is not there. Yeah, the stock price might be there, but the stock price doesn't mean much if there's no liquidity. So it's an interesting approach. Like you saw, there's a lot of questions that are coming up from just a quick dive that we did over here. So we looked at the filings. We looked, this one. I think this one was a really really easy one to look at because the debt was pretty much related party, which we know it's probably the shareholders. But if you go into another company that has debt, bank debt, whether it's bank debt, whether it's to funds, whether it's to whatever, then you have to look into who the fund is. What did they usually do? Have they been involved in other transactions? What are the terms? If it's interest, if it's compound, if it's simple, if it's convertible, do they have warrants? If they have warrants, what are the prices? So I think this one was real quick. Not a lot to look at on the file.
Real quick for quick. But I think we should do more of those. This was really, really good. I really enjoyed it. Like it was very, very good, and it's nice to see how each of us look at things on a different angle.
Yeah, definitely. So we're added it. We added it over here to get the company alerts on David Sling. We also added it over here to the dilution tracker. See if the company is issuing any shares, at least from now going forward. We're going to get alerts. They're probably going to file an 8K, I assume, regarding the reverse split. So we're going to get an alert on that. Then you have David that's going to talk to Jeff Yates, which we know now that it's the CFO. So let's see what he has to say about the company. Maybe they have a turnaround plan. If they do, then it might be something to consider and revisit on a later date. So,
by the way, if he's calling, I think it's another green flag.
Yeah,
I agree.
I think if you actually get the phone call from him.
What was the name of the people suing them?
it was the N. Let me look for it. It was
Another
Age?
important step that we need to do if you are interested in investing in the company
New
is
Age.
actually go to the lawsuit and actually read the lawsuit filings. But again, this is not our expertise, but it's definitely something you have to be informed and knowledgeable if you are an investor in the company.
David S. Hunt, do you know that's a securities counsel?
I don't believe I know.
I
David.
haven't seen this one. Not Tanner.
Also,
Probably-
Salt Lake City, they keep it tight. Tanner,
Yeah.
Salt Lake City. So
They
that's
usually
why
do
they're
it
getting
in
rid of.
Salt Lake.
That's why green growth is going away.
Yeah.
Yeah.
Amazing.
It's the same address. Scroll up. Scroll down. No, it's not the same address. No.
No. 6 employees. Well, it's not up to date, so let's disregard that. You know what? This is one thing that popped into my mind. Has it been a filing since 2021 and it hasn't been a different entity? That's good to know. Sometimes, and especially in the OTC markets, the companies get recycled. Like someone forms a company, they die, they stay as a shell. Somebody comes into the shell and turns it into another company, then they die as well. And so you see the list of filings over here. You're gonna see that the company has been one company, and then 5 years ago was another company, and then 10 years ago was another company. So that's another thing to know. Some of these tickers have been involved in legal troubles. So it's important for you to know if it has been public before, if it was a different legal entity, what was it in the past? Just a little bit of information, just so you know, it's important to know. Yeah, so I think this was a real easy one to get started on the due diligence path. I think it would be good if we maybe do it like a series where we pick different companies and go through them. This one was really easy. Maybe we can come up with another one that's hard, that has debt, that has warrants, that have preferred shares, that is losing money, that it's going through a merger. So we can kind of show the different situations that investors might be faced with. This is easy, but
I don't know about easy. I still have a lot of
Yeah.
questions. I still
I
have
still have-
thoughts about what's next for these guys because something's being brewed. And it could either go to zero real quick with a lawsuit going the other way, but who knows what's coming in here. So I'm really excited to see what happens in the next couple of weeks. We'll see tomorrow how this thing trades, which I don't know if that's really an issue at this point. Doesn't seem like there's too many people that are trying to get out of their positions.
no.
So I'm really excited to understand where this is going. Where this is going.
We're gonna wait for your update, David.
Yeah, no, I have a list of questions ready to go through with Mr. Yates. So hopefully hopefully that happens before next time.
Love it. Awesome, guys. This was a lot of fun. Paulo, thank you for preparing this. David,
Of course.
that was really good. I'll see you guys next week with all the new updates.
Awesome, guys. Thank
Sounds
you.
good, guys.
Enjoy the week.
All right, take care.
Just a quick reminder, the information in this podcast is for educational and entertainment purpose only. Nothing shared here should be considered financial or legal or investment advice. Please do your own research or consult a professional before making any financial decisions. Love you guys.